Stephanie, watching this on a day-by-day basis, it's like the stay-at-home names are in favor, they're out of favor. The text names are in favor, they're out of favor. What are you thinking right now? What's the smart move on this?
Well, yeah, no, it's been a challenge for sure over the last couple of months in the markets. But what I would suggest is look at themes. The economy, there are pockets of the economy that are doing well and pockets that aren't doing well. So I'm looking for themes of where the pockets are doing well, and that is in housing. We just did 1 million SAR in new home sales last week. That's up 43% year over year. Manufacturing is also doing quite well in terms of ISMs and new orders. The copper prices are at 36-month high. That's telling you manufacturing and growth is certainly recovering. And auto, we're going to do about a 15.7 million SAR in North America. That's up from 7.7 million in April. So these three areas are really where I want to be focused on. I have a couple of ideas. On the auto side, Aptiv, it's a supplier, best-in-class growth, margins, and free cash flow conversions, and they have superior technology, so they have the strongest growth over production in the group of 6 to 8%. My housing play is Stanley Black & Decker. It's a stay-at-home and a reopen stock, actually, Becky. Stay-at-home because 70% of their total revenues are tools and storage. On the reopen side, 30% of their total revenues is infrastructure. They have product innovation and digital capabilities and a $1 billion cost-cutting plan to protect margins. And lastly, FIS is an underappreciated fintech company. They provide electronic banking services and solutions. And I like it because 75% of their revenues are recurring. 75% of their revenues are in the United States, and they just bought WorldPay last year, so they have a cost and revenue synergy upside that protects them as we see the recovery taking hold.
Oh, good suggestions. Hey, JJ, when you look at your clients and how much they have in their balances, how active they are at trading, how much cash they have on reserves, how would you say they stand right now based historically?
I would say that overall, Becky, they've been, a little bit more certainly engaged over the last few months than we've seen in quite a while. I think the interesting time we're about to see is over the next month, to be honest with you, as the quarter ends this week. How do people sort of gun back up, if you will, for the election? Are people going to go more to cash, or are people going to continue to stay with their investments as they are? We haven't seen any evidence of that waning yet, but I think as the election starts to become a little bit more serious for people after the quarter ends, that it'll be interesting to see if we see a change in behavior. Often you see people back a little bit, not completely going out or anything like that, but I wouldn't surprise me to see people pull back slightly and go a little bit more towards cash as we headed right into the election.